And for me, I think it's really a summary of a lot of things we already know in terms of capitalization requirements, how they want to defend the naira, the exchange rate policy, etc. But then there are a few things stand out for me, and that's the monetary stance of the government and how they're looking to tackle, how they're trying to ease that at some point, obviously because of the impacts having on credit. Yeah. But then, of course, they have to always keep an eye on inflation. But what are your thoughts on that point exactly?
I totally agree with you. Prior to 2011, we had loose monetary policy. Last 1 year, what we've seen is some form of consolidation, and tightening due to the liquidity concerns, especially when, if you remember, the purchase of the AMCON bonds from the banks. Mm-hmm. However, going forward, the central bank has to find a delicate balance between controlling inflation, keeping inflation stable, which obviously it's still a major concern based on the report they released, and also loosening the monetary policy in a sense so as to increase lending to the private sector. So it's going to be a delicate balance. We expect that down the line, we expect some form of loosening on the monetary policy stance. Definitely, but you have to also always keep an eye on inflation.
A point that stands out for me is the plans to reduce the cycle for check clearing from T+, so that's 3 days, to T+, 1 to 2 days. Talk to us about your thoughts on the implication of that in particular. I think there are implications for banks in terms of income, and of course there's implication for how business activity occurs in Nigeria.
Well, I think it's the right way to go, first and foremost, because if you look at the advanced economy and the economies around us, reducing clearing days just means your payment system is more efficient.
That's right.
Now, what that does for banks is that the banks lose the float income, and obviously some banks actually really depend on those days. But on the other hand, what you lose on one side, you get on the other hand. On the other hand, what would that do? That would increase velocity of money, that would increase turnover. So I don't have to wait for 2 days to have my funds available to me to make another transaction. So by and large, that will increase economic activity. So I think that's a very positive one.
All right, and of course, there's also the pilot scheme of the federal government's implementation of what they're calling a treasury single account. What's that about?
Well, that refers to having a consolidated account between FGN revenues, the central bank, and all the funds that come into the economy, into the government. Essentially, what that should do for us is to put some structure into the way funds are managed, and that is very important for monetary policy, because you need monetary policy to work hand in hand with fiscal policy, and if that control is not there, that will just shroud everything monetary policy is doing.
And of course, there's also now more of a focus on the primary mortgage institutions. Yes. Clearly, there's been a lot of focus on the commercial banks and trying to sanitize that whole sector. Yeah. But then they're now moving into the mortgage institutions and, of course, the microfinance banks.
Yes. Well, those are two very crucial sectors of any economy. Now, you would agree with me that our mortgage institutions really are at the infants, at the infants level, and you can say that, of course, about the microfinance banks. So if the CMN is moving the spotlight to those institutions, it's just going to make them better. It's going to make them stronger. So they would achieve the purpose. What is the purpose of a mortgage? To help mortgage lending. Now we know that doesn't happen. And for every economy to actually grow, you need the housing market to actually thrive. Now, on the microfinance side, definitely we know sometime last year the government revoked some licenses, but the existing one, they play a very crucial role in saying that they deal with the bottom of the pyramid, they deal with people, and since the central bank's view on financial penetration is that they want to go out and drive that will just help increase financial penetration. That will also help increase lending to the bottom of the pyramid. Right. So when you have increased activities at the bottom of the pyramid and you be able to include more people into the financial system, it would all do well for your economy and achieve the much needed economic growth.
But coming back to the mortgage institutions, are you optimistic? Do you think that the central bank can do a lot to get the mortgage market really stimulated? I mean, one of the things that many people anticipate is that they would review capital requirements. Yeah. But what are your thoughts? Do you think that we can really get that mortgage institution sector going, bearing in mind that we are in a very high inflation, rather high interest rate environment?
Well, the challenge with the mortgage institutions is that the enabling legislation needs to be in place. One of the reasons why we don't have a thriving mortgage sector is because of the Land Use Act. That has where it's very tedious for people to actually have titles to their land. Now, when you don't have titles, you can't use that as an instrument or an asset, and you can't trade on it. But once that is taken out of once that button is taken out of it, and the mortgage institutions are able to mobilize savings, definitely down the line, over a period of time, the mortgage institutions will thrive. However, the Land Use Act has to go out of the way first.
That Land Use Act issue has been on the burner for a while.
For a long time.
Interesting to see how that plays out. Thank you so much, Chinedu, for joining us. Chinedu